Another day, another potential bank failure. This time, PacWest is looking for a potential sale or just investigating strategic options as their shares absolutely crash. And so that's something that I do want to cover on this channel. So, guys, as you smash that like button, let me run that intro. What's up, guys, and welcome back to the channel. Now, I've been spending a lot of time researching regional banks because this is an area that I'm moving like headstrong into. I haven't initiated a position yet in anything, but I'm learning more and more about, the different dynamics in the environment. But it's very crazy how in like real time things are absolutely unraveling in the industry. And so let's take a look at what's happening. So you can see here, PacWest is weighing potential strategic options, including a possible sale. And the bank was previously trying to raise capital, but they just found like it was not prudent. Now, why are they even doing that? Well, the problem is that they're like other regional banks, there has been a depositor run, especially for people who have uninsured deposits. These are just going to the larger banks. So you're kind of like in this unfair environment if you're a regional bank and people have non-FDIC insured deposits at the bank. They're just going to the banks that are essentially too big to fail. So, you have a serious weakness or a strategic weakness for regional banks that could cause more and more to collapse. Essentially, the dominoes could potentially continue to fall. Now, for people following this story, this is actually not new news. People expected PacWest to experience problems. Notice that like in mid-March, the shares declined from, near that $30 per share range, which they were in closer to in February, down to $10 per share. And so, the company was well understood to have risk. I actually have a tracker where I track 63 regional banks. I'm going to try to add around 40 more to that tracker, which I'll show you at the end of the video. And, I have PacWest on that tracker, and it was a very low rated bank as far as I was concerned when I put it up against 9 key performance indicators. And I don't think it had a very high score at all. And so, it was one of those banks where you thought, it probably could experience some risk. And the reason why the market felt like the company would experience a dire situation in this environment is largely because of that deposit issue that I just told you about. And with that, let's actually go into the article. So you can see here, this was actually reported by Bloomberg. So they're saying the PacWest is weighing a range of strategic options, including a sale, according to people familiar with the matter. So just take it with a grain of salt because, it's unnamed sources always. Now, while it's open to a sale, the company hasn't started a formal auction process. And, of course, there aren't many buyers interested in buying an entire bank in this environment, which of course makes sense. It would just be a larger lender. Now, here's where I'm in a bit of a unique situation. So what I've been doing while I've been not making videos for this channel is that I've actually been researching as many regional banks as I could. Like, I love this stuff, right? And so, what I noticed with PacWest is that notice how their loan to deposit ratio is now as high as 91% in March of 2023, so their latest quarterly report. And notice how it just flung higher from 73%, which is a reasonable figure in March of 2022. And, it just shows that $5 billion outflow year over year, or $5.7 billion outflow, so almost $6 billion outflow of deposits quarter over quarter, shows just how quickly the situation can turn dire at a regional bank in this environment. And so the question is, why is this happening? Why did they lose so many deposits so quickly? And here's the story. This is actually from their quarterly reporting. I know that this might be hard to read, but I'll just read it for you guys. And so, the story just comes down to what percentage of the bank's deposits are FDIC insured. And so, the CEO goes on to say, our deposits have stabilized with total insured deposits increasing from 48% of total deposits at year-end to 71% of total deposits at March 31st, 2023. Now, when I see that 71% number, that doesn't reassure me at all, because I think in this environment, it's prudent to assume that anything that isn't FDIC insured at a regional bank is likely going to move to a larger bank that's deemed too big to fail. I think that's the prudent move for, treasury people in this environment especially. And so so I think this is unfair to the regional banks, of course, and I do believe that the FDIC needs to step up and guarantee all uninsured deposits on a temporary basis at regional banks if they can. But, I might be just speaking out of turn. This might not be something that the FDIC can do, but, I feel like if they don't do it, you can essentially just line up who the next target is or which domino is going to fall next, because I think as interest rates continue to increase, you're going to see more and more of this unless the FDIC insures uninsured deposits. That's just my opinion. I want you guys to let me know what you think. And so, they have been looking for immediate steps to increase their liquidity, of course, including the exploration of strategic sales, which led to a transfer of a $2.7 billion lender finance loan portfolio to be now held for sale. We'll see if anybody buys it, but that's one of the strategic alternatives that they're assessing right now. Now, for every one of the Patreons, and there's over 200 of them that are part of the team now, I've said to all of them that investing in banks, especially regional banks in this environment, is very tough, and I don't recommend it for anybody who's new to investing. And the reason for which is that there are unforeseen risks that you may not necessarily be even thinking about. For example, there are huge storm clouds on the horizon, even for banks that have a significant amount of insured deposits. And so what exactly is that risk? Well, you can see Barron's recently wrote an article, and they're saying that there's 15 banks that have a risky specialty, and right now that risky specialty isn't a problem because they haven't been taking losses. And what that is commercial real estate debt. And so in a subsequent video, I'm going to cover this article. I'm going to cover the 15 banks that they call out, and then I'm going to do an assessment of a few of the ones that I think are strong in the list, because when it comes to commercial real estate, all commercial real estate isn't the same thing. So here's an opportunity for value investors. If you dig into these portfolios and you take a look at exactly what types of commercial real estate debt that they are loaning out to, and you risk assess every one of them, you could potentially find that needle in a haystack, or you could potentially find that diamond in the rough, is essentially what I'm trying to say in this environment. And I think I have found a couple. Now, it's never a recommendation on this channel. I just really love doing the research, and I'm absolutely going to be deploying capital in this environment for particular opportunities that I see. But once again, it's not a recommendation for you guys to follow suit. I just love sharing my research with you guys. Now, speaking of sharing my research, while I was away from YouTube for a month being sick, what I did was I analyzed 63 national and regional banks, and I compared them to one another using 9 key performance indicators, which you see up here. And I'm actually adding more and more now. I think the other one that I want to add is a percent of uninsured deposits. And so I'll try to add that if I can get that information. I'm not sure if they all disclose it, but essentially, if you want an understanding of the key performance indicators of many of the regional banks and how they compare to one another, this is a great spreadsheet that you can get access to. Now, how do you get access to the spreadsheet? Well, you can get access to the spreadsheet. It's called a comp schedule on the higher tier of the Patreon. And as part of that, you also get to join us for live monthly calls. We're having one this Saturday, and you can get access to the special live course. And so what do I mean about that special live course? Well, for example, we recently had a 2.5-hour regional bank analysis course where I spoke about the key performance indicators for the banks and what they mean. And then I applied those key performance indicators to banks as we analyze them. And then I provided my personal ranking of the banks that we analyzed. And so I'm going to follow this up with a subsequent analysis video, and I'll do it live with the Patreons. And so that's something that you guys can look forward to. Now, the other thing that I do want to point out is that one of the best pieces of value on this channel are the Q&A series videos, because I tackle really tough topics and explain them in as much detail as possible. And so if you haven't seen that series, you can get access to the whole Q&A series right here.